Did you know that the Federal Reserve can influence trillions of dollars in the economy with just a single decision? And yet most people don't even realize how deeply it impacts their daily lives? For instance, when the Fed changes interest rates, it can alter everything from the cost of your mortgage to the value of the money in your wallet. So is the Federal Reserve controlling your money? Let's find out. In today's video, we'll break down the Federal Reserve's role in the economy, debunk some of the biggest misconceptions about what it does, explore its real impact on your finances, and uncover surprising truths about the balance between the Fed and market forces. Stay tuned because what you're about to learn might completely change how you see the economy. So what is the Federal Reserve? The Fed, as it's often called, is the central bank of the United States. It was created in 1913 with one primary goal: to stabilize the financial system and prevent economic collapses. But its influence has grown substantially over the past century. Today, the Fed plays a critical role in managing the economy by controlling interest rates, the money supply, and even regulating inflation. Now here's where things get interesting. Many people believe the Federal Reserve directly controls their personal finances. While that's not entirely true, it does have a profound impact on how much we pay for loans, credit cards, and even the products we buy each day. To give you an idea of its power, the Federal Reserve manages a balance sheet worth over $8 trillion, a figure that's grown tremendously due to practices like quantitative easing. That's more than the economies of many countries combined. There are a lot of myths surrounding the Federal Reserve. Here are 3 of the most common ones. Misconception number 1. The Fed prints all the money in the economy. This is only partially true. While the Fed oversees the supply of money, actual printing is handled by the U.S. Treasury. The Fed's power lies not in producing dollars, but in regulating their circulation and controlling the conditions that make money valuable. Misconception number 2. The Fed controls what's in your bank account. It might feel like the Federal Reserve controls your personal money, but this isn't exactly accurate. While the Fed sets interest rates that banks follow, your money's availability, value, and purchasing power are shaped by broader forces, like market demand, consumer spending, and global trade. Misconception number 3. Certain people think the Fed is a private company designed for profit. Although it operates uniquely, the Federal Reserve doesn't function like a corporation. It has a dual structure, public and private, that serves specific mandates like regulating inflation and stabilizing employment levels. Its policies are more about balancing growth than making profits. So, if these myths are far from the truth, what does the Federal Reserve actually do? Let's dive deeper into its real power. The Federal Reserve has 2 primary tools: adjusting interest rates and quantitative easing. Let me break down how these affect your finances. Interest rates. Ever notice how mortgage rates, car loans, or even credit card interest change from year to year? That's heavily influenced by the Fed. When the economy slows down, the Fed lowers interest rates to encourage borrowing and spending. Conversely, when inflation gets out of hand, it raises rates to curb excess demand. Here's a quick example. If the Fed increases interest rates by just 0.5%, it could make a $300,000 mortgage more expensive by $100 to $200 per month. That's how closely tied your everyday expenses are to Fed policies. Quantitative easing, QE. During tough economic times, like during the 2008 financial crisis or the COVID-19 pandemic, the Federal Reserve uses quantitative easing. This means it pumps money into the economy by buying financial assets like government bonds. While this helps stabilize markets, it can also devalue the dollar and make everyday goods more expensive. Think about this. During the pandemic, the Fed injected nearly $3 trillion into the economy through QE, and while it stabilized markets, it also contributed to inflation, which we're all still feeling at the grocery store. Higher Fed spending equals higher prices for you and me. So, is the Federal Reserve all-powerful? Not exactly. While it has immense control through its policies, market forces ultimately play a massive role too. Here's an unexpected fact. the stock market doesn't always follow the Fed's lead. For example, when the Federal Reserve raised interest rates in late 2022 to curb inflation, stock prices fell dramatically, but then unexpectedly surged weeks later due to strong corporate earnings. This shows that while the Fed's decisions influence the economy, they don't control it completely. In fact, the interplay between markets, foreign economies, and individual choices often challenges or even overrides the Fed's intentions. So, what do you think? Should the Federal Reserve have more control over economic stability, or should we let market forces handle things? Let me know in the comments. To sum up, the Federal Reserve isn't controlling your money directly, but its policies shape the environment in which your money exists. Tools like interest rates and quantitative easing ripple through the economy, influencing everything from your savings account to your grocery bill. However, the balance of power between the Fed and market forces ensures that no single entity has complete control. Next time you hear news about the Federal Reserve raising or lowering rates, think about how it impacts your everyday life, from the prices you pay to how much you save or borrow. Understanding how the Fed works is the first step in taking control of your money. Alright, now it's your turn. Do you think the Federal Reserve should be more transparent about its decisions? Or do you think it's already doing enough to balance the economy? Let me know your thoughts in the comments below. And hey, if you enjoyed today's video, don't forget to click that like button, subscribe to the channel, and check out more videos on how money, markets, and the economy affect your life. Thanks for watching, and see you next time.